Hi everyone, Friday the 10th of November. We'd have to say it's been a interesting week, to say the least. Week 45 still. So we've had an interest rate rise. We'll just run over the week. Just going past Wombat, where we've got the Wombat Hotel for sale. Anybody interested that's in that price range of 500 to a million. Great little pub. Great first time pub. Only pub in town, right between four major towns in the Riverina. So yeah, that's a good little one. But anyway, back to the market. We've got, how does the interest rate rise affect hotels, motels, caravan park, purchases, auctions, the whole shooting box? Well, it's been affecting us for a good 12 months, if not 24 months. We've got a lot of buyers coming into our market, which is great. Absolutely awesome. A lot coming out of Sydney, eastern suburbs again. Predominantly, a little bit out of Parramatta, but we're finding raising finance is getting harder with the four major trading. Commercial finance, we're quite often looking at private finance being involved, which is a lot more expensive. I've had quotes anywhere between 15 to 20% with some of the buyers. So basically they just can't afford to pay a higher price. Therefore, it comes back to your books a lot of the time. As much as there's a romantic side of the purchase, there's also the reality that what will a business sustain in debt? And generally, a lot of the lenders are only lending 40%. So if that's the case, your sale price cannot exceed a certain amount unless you have somebody who doesn't need any finance. As another reason for buying, it could be a local buying something that they've always wanted to own. All of those things taken into consideration. So you've got to sideline that. It's kind of like everybody watched The Block, Sunday night auctions. You had two sell dramatically higher than the general market, and they were to those billionaires, I suppose they are. I don't know them, but they paid dramatically more than anybody else could pay, could raise finance on. So, you know, one lady fainted. One of the buyers on one of the other properties fainted at the first auction. So she had obviously been told she could buy it at a certain level, and then suddenly the level's $2 or $3 million above what she was willing to pay. So yeah, that's a special, what we call a special sale. You can't, it's not logical. It can't be valued. If you've got a licensed valuer to value those properties, that would be an interesting scenario. But anyway, coming back to our market, we don't have a lot of those types of buyers. We've just got the standard buyer who has to raise debt on the property, and if it has development potential, which we're finding now, that's a big thing in the regions where the buyers are coming in, they're maximising the site. If there's a bit of land, they're putting in, if it's a motel, excuse me, they're putting in more units, or they're putting in cabins. If it's a hotel, they're actually doing the same thing. or they're spending a great deal of money upgrading the rental accommodation, so the rooms, and a lot of that, you know, the one pub, it had, you know, it was the ground floor, first and second floor, so it had over $500,000 worth of sprinklers to be put in. So that's a big, that's before you start renovating and putting in en suites and upgrading everything. So you can see that your books have to show that it can sustain all of that investment in debt, because they very rarely are they using all of their own money, and that is impacting the sale prices. So if you set your reserves, and we'll go back to our previous auction, and some of the ones previous to that, if you set your reserve at your absolute limit of what you want, the buyers realise that it hasn't been announced on the market, so they don't get to competitively bid. So the properties are passed in, and they don't get a chance to buy it. So it comes back to, and this is a wee bit of industry working on and industry skill, I suppose, and working with the vendors on setting their reserves. So your reserve must be set low enough so that the buyers know they can own it and compete. And they do compete above your lowest level. The big thing about the auction is that it's a great marketing tool. It gets the buyers, gets the cash buyers to the properties, and it tells you exactly what your property is worth at that time. The only other alternative is putting a price on it, sitting there and waiting a year, 2 years, 3 years for somebody to come along and eventually buy it. So it's a totally different mechanism, but it gives you the chance of seeing exactly what the market's saying. And that's the market. That is the only price that really counts. An agent like myself, any agent in the business, or any vendor can stipulate a price, but at auction day, that's the price that the market is willing to pay, whether it's at the stock auctions, the sheep and cattle, at the fruit and veggie auctions, potatoes and carrots and everything else, the fish markets. It's the same thing. It's what the buyer is willing to pay on the day. That is the market price, and I think we can lose track of that and get caught up in the vagaries of what we think it's worth. So, and that fluctuates every day. You know, you've got to look at what the market's doing, what the financial market's doing, all those sorts of things. And of course, a real estate agent is not. It can't advise on the financial market. What we can do is, and it's where the valuers are getting caught out as well when they're valuing properties for the banks. They can only look at the facts and figures, and if there are discrepancies in your books, they will take a huge percentage off, because it's their reputation. You know, and they can lose their job by incorrectly valuing your property if your books aren't correct. And things like not banking your cash, things like we had a situation where there's a discrepancy between stock and retail sales, and it was clearly the hotel had purchased more stock than it had sold. So if a keg is about 47 litres, 50 litres, that equates to so many schooners at $7 a however much it is. It's a wee while since I bought a schooner, I'd have to say, but so that equates out, and then there's ratios, and a good accountant that knows pubs will run those ratios. And
in 300 metres, at the roundabout, continue straight onto Main Street.
It's always good Google, isn't it? Oops, Richie wants to have a look out. We're just in Young at the moment, and we're heading to Murringo, I think it is. Murringo. Anyway, yes, so the books didn't reflect stock versus retail. Quite simple. And there's a couple of reasons for that, and I don't know what they were. That's not for me to know. I can't get involved in that side of things, because that's up to the...
In 150 metres, at the roundabout, take the third exit onto Lovell Street.
Either there's a theft problem, or kegs being sold illegally. Either way, and that's only...
In 500 metres, at the roundabout, continue straight to stay on Lovell Street.
That's nothing to do with me, of course. You know, it's just the discrepancies you do pick up in the books. Now, if they're certified, and that's the other part, is that they must be certified by your accountant, so that the buyer can take your previous 3 years trading to the bank and say, well, you know, this is the business I'm buying, land and buildings as well, and this is what we're going to pay, and this is the amount of money we want. So that's all taken into consideration. But if, for instance, your books aren't correct, no bank's going to lend the buyer any money, so that stops how much they can pay at the auction. And we've had that, where the reserve was set at X, Murringo, is where we're off to. The reserve was set at a level that the vendors wanted, but the buyers they couldn't go above a certain point because the books simply would not allow it, and the books meant that they could only borrow X amount. So anyway, the long and the short of it was that, and you find that it's all buyers, it's not just one, because they all use the same books. So at the auction, we had live bidding, the marketing worked, had the buyers there, but they can only pay what they can only pay. And of course they stop and... Hello, what's going on here? They stopped bidding, and unfortunately the vendors, only one vendor was current, so they couldn't adjust their reserve, and we just passed the property in. So that's a case where setting the reserve too high, even those buyers, they're educated buyers. You know, if you don't announce the properties on the market, well, they know they're not going to own it that day, so they don't bid. And then the problem with that is that there are two things that happen to a buyer, and it's certainly been happening in my lifetime as an agent over 30 years. My uncle, 40 years. Is that the auction process is so intense for the buyer. They view the property, they decide they want to buy it, they then get the contracts to their solicitor, they're spending money, they then go to and arrange a finance, they attend the auction either on site or online, they bid, they get ready to pay a 10% deposit, and then it finishes and they don't end up buying it and it's not sold. They get two things happen to them. They start to get buyer's remorse, and they go from their peak buying period, which is about 24 hours to 48 hours. So at that time they'll move on to another property and buy it, or they go into buyer's remorse. They then drop out of the market as a buyer, as a hot buyer. They then become either they're not going to buy at all, or they will come back into the market in the next month, 2 or 3 months. So they've gone cold on your property, basically. Very hard to hold a buyer for a period of time. Near on impossible. Very, very difficult to hold a buyer that's hot that doesn't go on to buy another property. So what do? We must set our reserves correctly. We must set them to sell the property on the day. That's the time that the buyers, all buyers, even developers, are emotionally set and will pay the highest price. So whether you're auctioning with us or somebody else, and this goes, for me, dates right back to when I had the luxury of a chairman of Ray White coming out to Springwood in '86 and calling my auctions. It was something that corporate Ray White used to do. Both Brian and Paul. Their father Alan used to come out and call as well. So it was quite common to see the Whites out calling my little $50,000 houses. Who, by the way, would invest $1,500, $2,000 in marketing way back then on something as small as a $50,000 house, which to us back then was a lot of money. But if we come back to it, it's really important that you're ready to put the property on the market at that price. And if we don't get it on the market so that they can bid and buy, the ramifications are a lot less. It's a lot less money that you'll get after the auction. And now with interest rates rising, there's even less borrowing capacity out there for your books and your property. So pubs ideally have accommodation. You still have your rooms for rent. They're getting really good returns if you've kept them up to date and put in en suites and things. So accommodation, packaged liquor should be separated in your sales. Your accounts are certified by your accountant. So that's, to the best of their knowledge, your accounts are correct. and then the bank will lend them as much money as possible. But in saying that, it's getting harder to get finance out there, and that's affected our sale prices. Sale prices have just come back a little bit, but if we can get the properties on the market at the auction, you'll then get a better return. So if you set your reserve too high and it's not announced on the market, you're shooting yourself in the foot. You can't set it high. You must set it so that the bidders are capable of buying it on the day. So I think we as an industry, me as an auctioneer, have got to spend more time in setting the reserves, and that's an area that certainly I've just gone through my 4 days of auctioneer training, and that was very important to refocus on. We've got the inquiry, and you've seen in my videos, we've got more inquiry in the last 60 days than we have in the last 2 or 3 years, for sure. So the buyers are there, but they can only pay a certain price. So if you want to sell and move on, you've got to listen to the market, and you've got to stop listening to the residential market and comparing your pub with a house, because it's not, it's a pub. There's no comparison, and if they're getting more money in the residential market, so be it. And that's just a case in some of the regional areas where houses are selling more than pubs. You don't own a house, you own a pub, you own a business, and that's just the way it is. So anyway, that's our roundup today. It's pretty important that we're going to spend, certainly in our business, we're going to spend a lot more time in the reserve setting portion, so that we get our property selling unconditionally, so that the vendors can move on. You know, and that's the reality, because if you set your reserve too high, we've done the marketing, we've got the buyers in, and you set your reserve higher than the market, you're not going to get it. Just because you've set, you must get something out, a level, the market's not going to pay that. So you'll be sitting there in 3 or 5 years' time doing the same thing, when you could have accepted the market and move on with your life. And that's what we've got to do. If you go and sell your car at the auctions, and they tell you, and the buyers offer you X, that's what it's worth. So, and the farmers are accepting that with their stock at the moment. It's just the way it is. So they've had good times, they've had bad times, and that's how we are. The buyers can pay X, and they'll pay it, but they can't raise any more money on your books. It's your books, no one else's. So, and that's just the way it is. So I would suggest, if you decide to sell, think about the strategy. Now, you can stay on the market for 2 or 3 years at a high price, and unfortunately the market cannot pay anything over the debt that it can achieve on your books. So moving forward, we've got a lot of stock coming through in the next 6 to 12 months. Pretty exciting times in the auction market. Variety of stock all over the state, which is absolutely awesome. It's getting up north again on the coast, getting on the south coast. We're there at the moment, and we've got probably stock for the next 12 months. Out west, got a couple of beauties coming on board out west. A few renos happening before they come on board. And we're reopening one of our old markets, which is an exciting one for me, one I love. Bit of the background, I suppose, but part and parcel. So that's us. That's it from us. And I think we can say Merry Christmas from now on. And hope everybody has a great weekend coming up. We're on the road. So if you're trying to contact us, we've got Optus and Telstra. So you can always contact us 040 297 0217. That was your Optus option, and the Telstra option is 045 721 7925. Text on either, email brian@brian@ministrealestate.com. While I'm on the road, I clear emails. I'll clear the emails by 7 a.m. and then again at 8 p.m, 8:30 when we close the doors. So if you can't contact us during the day, it just means that both services are out of area. And texting probably gets through. And I know this is weird because your phone calls can't get through, but from time to time you just come into a green patch and the texts will come through. So thanks for listening, and we'll talk to you soon.